everyone, and welcome to MEFG in Conversation, our series dedicated to exploring timely topics with key industry leaders in the innovation ecosystem. My name is Priya Rajan, and I'm the Managing Director responsible for National VC coverage at MEFG Tech Banking Group. Today, I'm excited to welcome dear friend Navneet Govil, Executive Managing Partner and CFO of Softbank Vision Fund. Softbank Vision Fund is one of the world's largest technology investment funds launched by Japan's Softbank Group, with over 100 billion in backing from global investors. Funds aim to accelerate the growth of innovative technology companies shaping the future. Excited to welcome Navneet. Navneet has been with the fund since its early days. Prior to joining the fund, he held senior corporate finance officer roles for publicly traded multinational corporations. Fascinating background, Zambia to US, technologist to CFO. He holds MBA and Master's in Engineering degrees from my alma mater, Cornell University. We'll dive into all of this shortly. Excited to welcome Navneet, and thank you so much for joining us.
Thank you, Priya. Great to be on your show.
Amazing. Let's start with some intros. Can you give us a high-level overview of Softbank and the Vision Fund, and how the fund plays a significant role in shaping the global venture capital landscape?
Sure. So I'm not sure how much your viewers know about SoftBank, but SoftBank was founded by Masayoshi Son, our founder and who leads SoftBank, in 1981. It was initially founded to distribute software. Mm-hmm. And over the last 4 decades, I would say, we've gone through 4 major revolutions: the PC revolution, internet revolution, mobile revolution, and now the AI revolution. And Masa has this unique ability to see around corners and spot emerging technology trends. So as I mentioned, he started SoftBank in 1981 to distribute software. Mm-hmm. And then in the early 2000s, he partnered with Jack Ma, investing $20 million in Alibaba, which turned out to be one of our best investments, which we monetized for over $65 billion. And then he partnered with Steve Jobs to introduce the iPhone to the Japan market. And this was long before the iPhone was introduced in the US. And then later invested in Sprint. And, more recently, as you may know, we sold Sprint to T-Mobile and, made a 10x return in that. And I joined SoftBank at the very beginning of 2016. This was, at that time, Masa was talking about the AI revolution. And, it's really come, in the last 2 years and, more so with, artificial general intelligence and, companies, LLM companies like OpenAI. But Masa recognized in 2016 that the backbone of AI is going to be compute power. So we acquired ARM in 2016 for about $32 billion. It's trading in the public markets today for, somewhere close to $130 billion. So in 2017, as you referenced in your opening remarks, we started the Vision Fund, the $100 billion Vision Fund 1. Since then, of course, we have other funds. We have Vision Fund 2, we have the LATAM funds. So over the last 8 years or so, we've invested in about 500 companies. So some of the companies that your viewers, Priya, would be familiar with are companies like OpenAI, the parent of ChatGPT, ByteDance, which has TikTok, Databricks, fintech companies like Klarna, Revolut, Perplexity, Flipkart, DoorDash, Uber. These are just examples of companies that we've invested in over the years.
Incredible. You've been with the SoftBank for since the inception, almost 10 years ago, and have built an incredible team who I get the pleasure to collaborate with very, very closely. And can you share a bit about your role as the CFO for this large organization, and what matters to you as you're building a team at SoftBank?
Sure. So my role has evolved over the years. As you rightly pointed out, Priya, I started out as the CFO and, one of the founding members, helped build and scale the Vision Funds. And then now today, in addition to finance, I sit on our investment committee and on the boards of some of our portfolio companies. But what's interesting is in 2016, when I joined and we were looking to launch the Vision Fund, we were almost a startup, within the larger SoftBank umbrella. And as I think about, what were we doing and how we were looking to build, and I had not worked in an asset management firm or a fund prior to that. I had worked in a number of technology companies with different types of roles. So, in fact, my background is unique to many people that you would find, in CFO or Chief Operating Officer roles at funds. Most of those people have an accounting background. A lot of them come from the Big Four. And that's because it's important to do a lot of LP reporting. But when we started here, Masa wanted us to really focus on adding value. And my view was, in my role, there were three key constituencies. One was the limited partners, which is very traditional for most asset management firms. The other was our investing team. And, I'm very proud of the work that we've done there. So now over the last 8 years, we have built a repository of data and a lot of data science in terms of the 500 companies that we've invested in. What are the companies that have done well? Why did they do well? What are the companies that haven't done well? Why didn't they do well? And what are the learnings from that we can apply to newer investments that we are doing today? So, just to give you one example, is one of the learnings was that, companies that do well early, performance tends to be persistent. So in other words, a company that does work early in the earlier stages of investing will continue to do well, and companies that don't do well in the early stages don't do well over time as well. So for instance, companies like DoorDash and Coupang did well, and we made follow-on investments in those companies, whereas there were other companies that didn't do well. So, providing that kind of insights and data to the investing teams has been helpful, and also supporting our portfolio companies. Because I think when we started the Vision Fund in 2017, being one of the largest players, as you said, it also meant that, we in some ways disrupted not just the venture capital, but the growth equity market, in the sense that we are one of the few funds that was able to provide patient capital. And what I mean by that is, a lot of funds are structured for 5 or 7 years. We had this structure which was about 12 to 14 years. So that means we could support a portfolio company through its entire growth journey all the way to IPO. And we could support our founders with follow-on investments, not just participate in Series C, but D, E, etc. So, and to your other point about building teams, as a startup within SoftBank, there's a lot of dilemma that how do you build a team? Do you hire people at the top of the various functions and let them build the organization below them? Or do you build from the ground up? And what I did was I hired strong people at the mid-level, because the idea was these aren't people who are going to be just supervising, overseeing other people. They had to be hands-on, but at the same time had good judgment. And that's worked out really great, because a lot of the folks that I hired at that time are now heads of various departments here and have been with the firm for, over 8 years or so. In fact, all of my direct reports have been with the firm for over 8 years now.
You talked about being in the investment committee and your engagement with portfolio companies. I want to double click on that a little bit. You sit on this investment committee. It sounds, of course, absolutely rewarding, but also sounds equally challenging. And how do you ensure that you're making the best investment decisions? And also, how do you engage and support with your portfolio companies, both the founders and the CFOs?
Yeah, so we're late stage growth equity investors. So unlike, let's say, venture capital investors, where I think in general, the view is 10% of the investments are going to be successful, but those 10% are going to, make an enormous return and make up for the other 90% that don't work well. With late stage growth equity, we target somewhere between 55 to 70% of our investments will be successful. And that's actually borne out over the last 8 years, both in Fund 1, Fund 2, and our LATAM fund. But overall, in terms of our investing thesis, we really focus on 4 things. The first is the quality of the AI stack, and that's fairly self-explanatory. The companies have to be AI first and on the cutting edge. The second is positive unit economics. The third is execution excellence. And the fourth is product market fit. And I'd say that in some ways is the most important, because product market fit, everybody talks about it, but it's really hard to see that play out. And sometimes a lot of founders and visionaries will force fit, or will make it, will try to convey that there is product market fit when there isn't. And I don't know, Priya, if you remember, like I think in the early 2000s, there was a company by the name of Webvan, which basically delivered groceries. It was a great idea, but the reality is it didn't have a product market fit. And today, 20 years post that, you have companies like Instacart that do the same thing, but have a wonderful product market fit. So in our portfolio, the company that comes to mind is PayPay. PayPay is a Japan payments company. The government in Japan in 2018 said that they have a target for digital payments to be about 80% of all payments. And at the time in 2018, it was only 24%. Okay. So PayPay entered the market to address this challenge, and they perfectly solved this product market fit issue. So, and as we look at, now that we have data on 500 companies, we look at what worked, what didn't work. And what we found is that sometimes inefficient sales and marketing spend can be an indicator of product market fit challenges, poor pricing, intense competition, all the kinds of things that would be an issue. And throwing marketing dollars, like to gain market share, etc., doesn't make sense, because then you don't have the unit economics. So product market fit has to be really important. Then to the other part of your question, Priya, in terms of working with our portfolio companies, this is one of the things, and again, I said this earlier, in terms of our three constituencies: the limited partners who gave us their capital to invest, our investing teams, and then our portfolio company founders. We've now had about 55 companies that have gone public, and I really enjoy working with our CEOs, CFOs on helping them on that IPO journey. In fact, tomorrow I'm meeting a CEO, CFO of one of our portfolio companies to discuss an upcoming capital raise. So some of the things, we help them with, or some of the things I specifically help them with, is the advice on book runners. And as you can imagine, Softbank, we give a lot of business to banks. We have relationships with all the top 20 banks. MUFG are one of our key partners. So advice on who should be the book runners, how to work with the book runners, the roadshow, what is important in terms of telling a compelling equity story to institutional investors, when to start that process. So for instance, now, PayPay, the kind of example I gave you, they have announced that they're going to be going public, and, working with them. We have other companies in our portfolio that are going public, how to help them. Then the second part is, once they go public, how do you ensure that they do well in the capital markets, right? So there's this thing about beat and raise. Like when you give guidance to the street or institutional investors, it's important to be able to beat and raise every quarter. And then, of course, also having the appropriate controls in place. In the US, we call them Sarbanes-Oxley controls, but SOX controls and others, because the last thing you want is you go public, there's some kind of a deficiency in your controls, and the things go downhill from there. So that's how we, I in particular engage with our portfolio companies.
It's extremely valuable. Talking about the investment landscape, we're at the halfway mark in 2025. I can't believe it. Time flies so fast. How do you see the rest of 2025 kind of pan out? Particularly, I know you touched a little bit upon IPOs, just around exits and even a broader investment landscape.
Yeah, so the last 3 years, I would say 23, 22, 23, 24 have been kind of a lull in terms of public listings for a variety of reasons. There was a lot of optimism coming into 2025 that we would see more listings this year, and we did see some at the start of the year, like companies like Core we but then there were a number of macroeconomic things that happened, in terms of tariff announcements, geopolitical instability, volatility in markets, et cetera, et cetera. So a number of companies then paused their plans for IPO. Fintechs like Klarna, Chime, which are both our portfolio companies, as well as eToro. But then recently things that have stabilized, volatility has come down, and we're beginning to see more companies go public. But the bottom line is, a company that's ready to go public, that has strong fundamentals, will usually go public at any time, because there'll always be demand from institutional investors for that. And in fact, NASDAQ CEO Adena Friedman recently highlighted that the IPO pipeline remains healthy with 100 plus IPO candidates that have filed in recent months. When I look at our own portfolio, eToro was one of the first companies out of the IPO gates about 3 weeks ago, and they're up close to 20% since the IPO. Our India portfolio companies, the market in India, the capital markets have been very resilient and strong. We've had a number of companies go public recently: Swiggy, Ola Electric, and FirstCry. And then, the rest of our pipeline is also very robust. But what's interesting is, over the last 3 years, as I said, while the listings were not that much, we also saw an uptick in M&A activity.
Right.
So there, for instance, I'm sure everybody has heard of Google acquiring Wiz for $32 billion. By the way, and that's a cybersecurity company, and we invested in them about a year ago at a $10 billion entry valuation. So that's worked out well for us. There have been a number of other companies, that have been acquired. And in fact, I think in May alone, for instance, Databricks announced that it would acquire this database management platform, Neon, for about $1 billion. Salesforce announced its intent to acquire Informatica for $8 billion. So what we've also seen is, now that a lot of companies are staying private for longer, there is more what we call private on private M&A activity. So rather than a public company buying a private company, it's kind of private on private. In fact, in the Vision funds, we've had 17 strategic exits to date, and we've been able to generate about $9 billion through those. For instance, one of our LATAM companies, Pismo, was acquired by Visa. Vividian Therapeutics was acquired by Bayer. So that's good. I think all of this bodes well, both in terms of IPOs and private exits.
Again, we need more of those. So we're definitely welcoming that momentum and here to serve any of the growth and middle market companies with their financing needs, whether it be it's M&A or as a path to IPO. You touched upon AI, and Masa-san and Softbank have been in the news for Project Stargate and your investment in OpenAI. And how are you looking at investing in AI?
Yes, so that's a question I get frequently. So, in Masa's mind, it's relatively simple. And, he talks about artificial superintelligence and realizing that in about 10 years from now. And the way we think about it is, there are really 4 parts to what I'd call our AI strategy or investing in AI. There's the, in very simplistic language, there are the raw ingredients of AI, and I'll get into that. Then, again, I call it like the brains of AI to power human-like reasoning. Then there's physical AI and applications of AI. So let's take each of those. So the raw ingredients of AI, this is exactly what you said, the Stargate partnership that we have with OpenAI and Oracle. and with support of the Trump administration, the idea is to build compute power. And increasingly with AI, people are already seeing this, whether it's LLMs like OpenAI or DeepSeek and others, they require a tremendous amount of compute power. So our Stargate project is all about building data centers and compute power. And, one of our own companies, ARM, that SoftBank owns 90% of, is the leading chip designer for that. And we also recognize that when you build these data centers, they're going to require a tremendous amount of energy. So we've invested in clean energy, companies like Helion Energy that provide nuclear fusion energy. So that's kind of like the raw ingredients of AI that we're investing in. Then there is the brains of AI to power human-like reasoning. And here, we've invested in companies like LLMs, like OpenAI. We've already invested $10 billion in OpenAI. There's a further commitment to increase that up to $30 billion. And companies like Perplexity and others. Then there is physical AI. Physical AI is like robotics, hardware, and software. And there are a couple of companies in our portfolio that are examples of that. There's 1X, which is an advanced general purpose humanoid robots. There's Skilled AI, which is general purpose software brain for robots. So that's kind of physical AI. And then lastly, it's applications of AI. So here in cybersecurity, I mentioned Wiz, which was a global leader in cloud security. Then in data analytics, we've invested in Databricks, which is leading analytics platform for enterprises. And then AI drug discovery. So we also have a life sciences portfolio. And some of the companies there, for instance, Arsenal Bio, which is an AI-driven programmable cell therapy using CRISPR-based genome engineering to treat solid tumors. Mm-hmm. So, it cuts across those four things: the raw ingredients of AI, the brains of AI, physical AI, and then applications of AI.
One question about Masa-san. One of my bucket list items is to meet Masa-san someday, hopefully in my next Japan trip. But you have this unique experience and opportunity to work with this visionary firsthand. Can you share one of your most memorable or any fun experiences that you have had with them?
Indeed. In fact, it's been a privilege of a lifetime to be with him. Spend time with him over the last 10 years, and he's very generous and will invite us to dinners with him and the portfolio companies. And I think one of the things, obviously, I've been had the privilege of listening to him, learning from him, being in the room with him. But I think a lot of our founders appreciate this as well, which is his ability to brainstorm with founders and think out of the box. Oftentimes I think we've been criticized in the past about, there've been articles about, hey, the founder wanted, 100 million or 200 million, but we ended up investing a lot more in the company. And what they don't realize is what happens is when Masa starts talking with the founders and starts brainstorming and his, unique ability to think out of the box, what happens is, somebody comes to us. And, I remember these discussions with these founders, when we were investing in rideshare, like companies like Uber, Grab, Ola, Didi, etc. They would come and talk about, ride sharing and all of that. And Masa would say, hey, what about expanding into food delivery? And at that time, nobody thought that was realistic or feasible. You fast forward to today, Uber has, both ride sharing and Uber Eats, there is DoorDash, and it's just incredible how his mind works. So that's one thing that, I really appreciate. And it's just, it's fascinating to be with him and learn from him. The other is, I think just like all other founders and visionaries, one has to be a risk taker. I, on the other hand, am risk averse. And, Masa teases me about that as well. Hey, you're too conservative. But I think at some level, he probably appreciates the fact that our entry valuations in a lot of these investments have been prudent, and we're marking our portfolio on a reasonable basis. And I suppose that may be one of the reasons he appointed me to the investment committee.
you bring the right balance. Any final thoughts or advice for the listeners that are looking to pursue a career, either in the venture capital space or as a CFO?
I think part of it is, a lot of people think that investing is picking the right startups or, thinking about, where technology is headed and things like that. Now, of course, as I mentioned, Masa has this unique ability to see around corners, but I think a lot of it is about, relationships, because investing is not just picking the right companies, it's knowing how to source, doing the diligence. Many times, and not just us, but I'm sure other investors as well, have walked away from certain investments because issues come up during diligence. Then there is how do you create value, accrete value in a certain company? And I think, we've done a good job of that with a lot of our portfolio companies. And then there is the part about, a lot of people think that investing is just deploying capital, investing, but that's the first part of the cycle. The other part is returning capital. There's, you invest in companies, you help them accrete value, and then after that, we have to return that capital to the investors so then they can come back to us, we can raise more money from them, provide a return to them. And that's where, we talked about how do you exit these companies, whether it's through IPOs, secondary transactions, M&A, things like that. So there's a lot of, it's a lot more complicated than, people may think. But I think relationships are important, relationships with other VCs. So when we came into this space in 2017, a lot of VCs, they thought, okay, we're deploying a lot of capital, but to some extent, there are two things happened. One is we provided exits to early stage investors because we were Series C and beyond investors. And those were exits for people who came in the seed round, Series A, Series B. We partnered with a number of other VC firms. We would give them ideas, they would give us ideas, we would co-lead deals with them. And then there were founders that would come to us and have, share ideas about what they were doing. So I think relationships are important, integrity is important, and just, to a large extent, enjoying the process. And for me, it's been a tremendous learning experience. Things that I would watch on CNBC and Bloomberg, now I get to experience every Monday in our pipeline calls.
Super insightful, and really appreciate your time out of your busy schedule talking to us. And thanks again for joining us. And thank you all for joining us, and looking forward to seeing you all soon.
Thanks, Priya. Take care.
Thank you.